Nobody had this on their radar, but Onyxcoin more than doubled in the last 24 hours. What's behind this rally? Who's buying here? Who's selling here? How much higher could we potentially go? Does it still make sense to buy Onyxcoin? Let's have a look at the on-chain data, the data most people are not considering. So here we are right now at 2.6 cents, up 114%. And at the beginning of this week, we were at around half a cent. Now, not everything seems to be 100% clean around the project. And I try to always point out the positives, but also the negatives. One negative is that I believe that the social metrics, the Twitter following, is not 100% organic. Because have a look at this. There is 65,500 followers. And there's all kinds of sales mumbo jumbo on the website with the launch pad, with the staking, with the tokenomics, etc. It's mainly about the token, not necessarily about the technology. But then that Twitter following compares with 24,000 holders on chain. In other words, there are less holders on chain than Twitter followers. This is very, very uncommon. I believe that not every one of those followers is actually real. Now, the application itself is not necessarily that impressive. It's a very basic staking UI with a relatively high staking APR, more than 30% per annum. This hints towards a somewhat inflating supply. But let's dive deeper. What kind of fundamentals are really behind the project? Is this really just a staking platform, or are the developers working left and right to build something new? We can have a look at the GitHub repository. So GitHub is the place where technical developers submit their changes to the code. And we can find out how active a GitHub repository is. Have a look at this. Those graphs over here indicate how many changes there have been made. Unfortunately, it's really not that much. Maybe there's some development in the background that's not on GitHub, but it's definitely not public. Still, the price is going parabolic. So what's behind this? In the last 24 hours, we went up by more than 100%, and we've got 1,481 buyers on chain versus only 493 sellers. So there's 75% buyers versus 25% sellers. That's very, very positive. Now, in the last month, we've seen a 10x, and in the last year, a 20x. Now, what happened to the number of holders? Let's say the retail holders versus whale investors in the last month. Because not all of those 24,000 holders are created equal, right? Some of those might just be bot accounts that just own a few dollars worth of the token, and others might hold hundreds of thousands of dollars worth of it. So here we've got the split up. On the left side, we've got the retail investor. On the right side, we've got the whale investor. So the equivalent of token holdings on the left is $1,000. The equivalent on the right is $100,000. And in the middle, it's something in between, $10,000. And we see very nice constant growth by the retail investor in the last month, with some acceleration even in the last few days. We see the same for the medium-sized holders, and for the whales, we also see some growth, but it's definitely not as constant compared to what we see with retail. But yeah, it appears as if the selling by the whales is not strong enough to make any dent in this very nice chart. We also see that especially in the last few days, the number of new investors grew very quickly. So on the left side, we see the number of new users versus returning users per day. On the right side, we see this normalized to 100% per day. So attention started going up on the 17th of January and stayed elevated. And the ratio of new users versus returning users also improved. This is what we want, right? We want a growing investor base. We want to see more new users onboarding regularly. And ideally, we want to see that outgrow the existing investor base that trade the token. But then when we zoom out a little bit, it wasn't always sunshine and rainbows. We did have our massive crash in the early days. At one point, the token was traded at 17 cents. Now we are at 2.5 cents. Again, because of the inflating nature of the token, we went south for a very, very long time. Only recently we are recovering. And here's the thing, those are the long-term holder charts, not just for the last month, but all time since trading of the token. It all goes up into the right, but the price did not always go up into the right, again, because of the inflationary nature of the token. Here's the number of buyers and sellers over time, and we actually have never seen that much activity around the protocol ever. Now, the Trump-related tokens continue to dominate the Solana chain. Have a look at the trending tokens ordered by their liquidity, and the Trump token plus the Melania token combined, they are at 900 million. And just see how this compares to Fartcoin or to Pengu, right? Then we only get into the 20 million mark. So really, this is becoming more and more of a politically driven market. Now the question is, how can we buy something like Trump or Melania early? And I believe that simply by copy trading people that in general tend to buy things early, that in general tend to be among the winners. Have a look at this over here. This is our wallet tracking. And over here we see that Across the Rubicon bought the Trump token for $3.36. So just a few hours after launch. But we've also got other people like Crypto King, like Greeny Trades, like Kyle Chessy, that bought Trump very, very early on, right? Here's Kyle Chessy for $10. That was over here. Afterwards, the price went up by more than 600%. And even after this massive dump, it's still up. Here's the YouTube channel of Across the Rubicon, the people that bought the token the first. And they are focusing on wallet tracking as well in their paid community. Here is Crypto Gains. He also bought Trump very early. We've got 55 of his tokens. Here's his YouTube channel. Then we saw the Kyle Chessy purchase. We've got 12 of his wallets that we are tracking. Here's his channel. And so there are several channels that we are tracking where we try to find buying opportunities early. Crypto is really not just a luck game. It's not just random gambling. If you know that the president of the United States is launching a meme coin and you react to this very early and you see all of the other winning players also buying into the token, then this is a good signal to copy. And that's the reason why I like wallet tracking so much, right? The blockchain is 100% transparent. Once we know who owns what wallet, which is actually the tricky part, right? This needs a lot of skill. Once we have that connection, then we can track the wallet and we always can get an alert whenever purchases or sale transactions happen. Now, I made a tutorial course on the sole subject of finding influencer wallets. There are 8 separate videos on this topic, and we then use the time and intelligence of the community to find new wallets, to add them to our tracker and to refine our tracking. So that's individual Telegram chats on wallet tracking. Once we have a buying signal, we of course have to discuss signals as well. That's why I've got dedicated chats on the individual altcoins as well. It's all part of the premium membership of this channel that's down below, thebitcoinstrader.com. Premium is not just about wallet tracking, it's also about risk management, it's also about on-chain analytics. There's more than 100 tutorial videos in total in premium. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't get any value out of this, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. Now, a token that's highly inflating should only be held when it's also staked, right? Because if you just buy the token itself and you don't do anything with it, then you get diluted, right? Other people get all that staking supply, you don't. So you will get less and less as a fraction of the overall supply by just holding the token and not staking it. Now, most trading volume actually does not happen on chain. It does not happen on Ethereum. The trading volume is dominated by Coinbase. Almost 40% of trades happened on the spot market on Coinbase. On top of that, there's also the perpetual futures market, with Bybit being the leader and XT.com, a derivative of Binance, following. The main question though, is it worth staking Onyx long term? And that's a big question mark. What we see over here is Onyx relative to Bitcoin. So is it a better bet long term to buy Onyx over Bitcoin? And of course, we see our initial collapse of the token. Now we see our revival. This is a logarithmic chart. And it starts in April of 2022. So we've got a bit less than 3 years of data, and Onyx underperformed Bitcoin by 87%. So there is 13% left. Now when we've got 30% APY, we maybe have doubled, maybe a bit more than that, our supply. So out of 13%, we maybe get 26, 30, something like this, 30% of a Bitcoin holding. So if you held Onyx, you staked it over the last 3 years, instead of buying Bitcoin, you would be down relative to Bitcoin by roughly 70%. So the staking does help to a degree to protect somewhat against the losses. but it was definitely not making up for all of the losses. And that's the problem in the end, right? Because Onyx is a way more risky investment than Bitcoin, and this elevated risk should be compensated with more performance, not with less performance. And so I don't know how long this pump will continue, right? This might be market makers that could potentially push up the price in order to squeeze the short investors, because if enough people bet on falling prices and then you push up the price, then those short investors, they get liquidated, and that of course generates a lot of fees and a lot of profits for the squeezers as well. But at some point, any short squeeze will stop, of course, and then the inflating nature of the token will take over once more. And so that's why I'm not really a fan of holding Onyx long term. We could go up short term a bit longer, but I think the better way to play the token, if you wanted to play the token, is to potentially short it, and if you then get liquidated, to short it again, and if you then get liquidated, to short it again. I think dollar cost averaging into a short position is safer for Onyx than buying into the token, simply because the tokenomics aren't really that impressive. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.